Hi there, Teresa Timms, the SoCalLoanPro.com and president of TDR Mortgage in Upland, California. You can't see her, but you'll probably hear her.
Hello, everyone.
My partner, Jocelyn, is here. And I'm going to do, my screen isn't big enough to get her, so what are you going to do? Yeah. But she said, don't worry, you're going to hear her.
You'll hear me.
I wanted to do a market update. I think it's important that we kind of get the word out about what's happening, and I've been hearing a lot of information about people's thoughts about the real estate market and rates and all of that, and I wanted to throw my 2 cents into the pot so you can have a different view to ponder. I have been doing these market updates and making rate predictions and market predictions since the late 90s and early 2000s, and I have been right. I'm just saying. I sold property at the very, very top of the market and have known when to buy property at the very bottom of the market. I follow a lot of really, really smart people, especially Inland Empire specific economists and professionals. So I've been able to know exactly what's going to happen. And nobody has a crystal ball, but there are just certain things that one knows. And I also think that I have a really good intuition because I'm a woman. So it's true, right, Jocelyn?
That's true.
Mm-hmm. We know stuff, just so you know, men. Anyway, okay, so the biggest news that's not being told on the media or really reported on, or I haven't, have you seen anything on it? Nothing. So let's just, an example, a 3% down conventional loan for $450,000. We're pricing it out for somebody that has a 720 credit score, and we are doing a no MI loan or regular MI?
No, we're doing no
MI, which is great, amazing. 4.2, 4.3 rate, maybe it costs a quarter or something like that. And then flash forward to the last week or 2 weeks, and that same program is pricing out at like 5.25, 5.3, even with a little bit of cost. The FHA loans, I'm noticing the biggest change on those. You know, often we would do an FHA loan. Let's say the FHA rate without us paying any closing costs was 3.7, 3.8, 660, 680 FICO score. And now when we're pricing those same loans out, Jocelyn prices them out more than I do. And lately I've been left with like, that's the rate. I'm like, what are you telling that client? Is that the rate? Let us shop around. And lo and behold, it seems like every time she goes to price something out, I'm just surprised. And, you know, a rate in the mid to upper 4s, lower 5s is still a good rate. But we've seen pricing really, really go up. And, you know, when the rates are like 3%, low 4s, it's not as noticeable. But as soon as those rates went up to 5.25, we noticed a big, how do you make that? What do you go, skirt? We noticed just like that happen right away, and it impacted the refinance market drastically and stopped a lot of people's opportunity to lower their payment. I've heard different lenders are laying off, and actually Jocelyn knows a lot of people that have recently been laid off too in the bigger companies. Okay, so rates, if they go higher, it will be a huge problem for us because our prices are so high, and it's just going to raise that affordability so much that it's going to impact too many people, and they're not going to be able to afford to buy. One of the things that top of the market, people like, hey, are we at the top of the market? And I hear a lot of people that are even in my industry that think we're at the top of the market. And we are not at the top of the market. I don't want to say exactly how close I think we are. Well, I guess I could. So what is it right now, 2018? I know we've got a couple more good years, maybe 3 good years. One of the things that we have right now that we didn't have is people have jobs. Lots of people have jobs, and they're making top of the market wages. And a lot of employers have employee shortages. And so we're seeing wages grow and go back and even surpass what people were doing in the, pre-crash. Also, what was the other thing I was saying? Okay, jobs. Oh, I know what else. Okay, so then now I've been thinking that they're gonna come out with, how long have I been saying this?
Yeah.
But they're gonna come out with a product, and it's gonna be this great product. It's gonna be stated 10% down, self-employed, 700 FICO, and then all kinds of people are gonna be able to buy. But they still haven't come out with that product, and I think it was because the rates have been so low, investors really didn't want to jump in. It wasn't worth it for them. Well, now that the rates are in the 5s, they can come out with some kind of interest-only product, perhaps 40-year. We've got that product in a jumbo. We already do have that product, but we don't have it in a stated form.
No.
It's not stated. And how many people do you come across that are self-employed that could
Not
really...
many. I mean, a lot of people could benefit from it, but not a lot of people want to do it now. A lot of people want to hold off to see if that product will come out.
So my prediction is that we've got a lot more traction ahead of us. And right now, all the loans that are being made, they're all 30-year fixed. They're all like super great loans that we have, and nobody's upside down. And I don't think that where we're at right now, we're going to have any issues with foreclosures because people can afford those payments, and they're 30-year fixed. So I think the trouble loans, and they will come, they're going to come. Everybody's going to forget about what happened. They are going to come, and then that's going to propel our housing market into the next 2 or 3 years. So don't worry. That's not to say it's not a fantastic time to sell. Our market has an extreme shortage of inventory, like extreme. I think we're at like one of the lowest inventory stages that we've ever been at. And people are staying in their homes longer. People are staying, 10, 11 years versus like 5 or 6 years. People are staying put because there's not really too much for them to move up to. It's hard to move up. We've had a shortage of inventory for a while. This is nothing new. But right now, it's really bad. So if you're selling your house and you know that you're going to do a move-up purchase and you're going to put a big chunk down, you're going to have multiple offers. You're going to have your pick. You're going to have pick of cream of the crop of buyers, and you'll be able to pick the best one, and you'll be able to call the shots, if you're going to do a contingent sale and buy a move-up property. So you'd have no problem doing that. I still think that there's a lot of opportunity for first-time buyers to take advantage of the programs.
There's been a lot of new updates with a lot of first-time buyer programs. There are a lot of jumbo products, like we're able to offer a first and a second, 15% down if you're looking for a jumbo loan, or a lot of the first-time Cal Half a program just raised their qualification standards, so a lot of more people can qualify for the program. So
right.
It makes it a lot easier for first-time buyers, and a lot of people, I think, are scared because the rates are higher, but you can benefit from this great program and buy a house with, $4, $5, $6,000 and get into a home. But
so so my thoughts have always been, if the mortgage payment is close to the rent, it's a buy recommendation.
Yeah.
Like it's a no-brainer. You need to buy.
Right.
If it's $200 or $300 more than rent, I still think it's a buy recommendation because of the tax advantage and the write-offs and things like that. But what if you're buying a house and the payment is like $3,700 or $3,800, but you can rent that same house for like $2,500 or $2,700? To me, I'm like, gosh, maybe you wouldn't want to buy that house. Let's say that's a 30-year fixed, though, too. Let's not say it's like some kind of crazy interest only, but it's a 30-year fixed. Some people wouldn't mind the difference because why?
because they own a house now. It's their own home. They're, you know, the equity they're building. They're not just renting. And for a lot of people, renting is sort of throwing money away.
Right.
Because this is never going to be their house. So a lot of people that are making good money now and can afford $3,800 and it's fixed and it's 30 years, why not buy a
Right.
house?
And then I think, too, one of the things of the comforts of owning a home is being able to individualize it, make it your own, plant flowers, attract birds, things like that. Okay. I think that's it as far as the market update goes. When you're thinking of buying or selling in Southern California, I want you to think of me, Teresa Timms, the SoCalLoanPro.com. And you can find me on the web there, too. Have a great day.